Hello everyone, welcome to the Research Insightful series by JM Financial Center for Financial Research we host here at IIMU. Today we have with us Professor Jitendra Aswani, who is one of the distinguished faculty from our finance and accounting area. Having postdoc from both MIT and Harvard, he is one of the famous and he has a strong academic and research background. His research interest lies in corporate finance, sustainable finance, debt markets, application of AI in finance. Thank you for joining us today, sir.
Thank you, Nani.
Sir, recently you have published a paper in Management Science regarding rethinking the value and emissions implications. So, could you please tell me how is corporate green bonds different from conventional bonds?
Thank you, Nani, for asking this question. So, in the corporate green bond market, green bonds are described where the issuers say that whatever the proceeds I'm going to get from this issuing these bonds, I'm going to use for the green projects. And how the green projects are decided, these are the guidelines by ICMA, which provide the green bond principles. So as per this guideline, there are 13 categories in which the issuers have to put the proceeds amount, the different projects. They call it green categories or green project categories. And then afterwards, how they invested, it comes after the issuance, and then the development of green projects and all those. So this is different from the conventional bonds because here the issuer is restricting the use of proceeds to only the green projects. In the conventional bonds, you have a broad spectrum. You can invest anywhere, but here you only have to invest on green projects. And that's how the green bonds are different from the conventional bonds.
Sir, in the paper, when I was reading, I found a term called greenium. So, what does it actually mean? Can you please elaborate it for the audience?
Sure. So, greenium full form is a green premium.
Okay.
So, when we say that something is premium, it means it's more pricey as compared to others, right? So, in the bond market, if some bond is premium, it means it is high price. If something is high price, it means it's a less risky. Right? So the question is whether the green bonds are less riskier than the conventional bonds or not. So this is the whole, whether there's a green premium, that green bonds have lower yield as compared to conventional bonds. Yes.
Okay. Sir, could you please just elaborate, while doing this, you might have went into how this green bond works, like its mechanics. So could you please elaborate a little bit more on its mechanics?
Sure. So whenever the issuer, whether it's a corporate, whether it's a munis or sovereigns, whenever they issue the green bonds, they issue the prospectus as well as the ESG framework.
Okay.
In these documents, they say that, okay, these are the green project categories in which we are going to use the proceeds amount. This is at the time of issuance. And till the maturity of this bond, they issue impact reports. They also issued the auditor's reports saying that whether the green projects are certified or not. So this happens till the maturity. So this is the criteria that first they issue the ESG framework, then impact reports each year till the maturity.
Sir, what do you think? What is your take the evolution of corporate green bond markets worldwide, as well as what is the Indian scenario like?
So, so I'm going to talk using the data till 2024. So right now the green bond in aggregate is $5 trillion market. But if you see comparable to total bond market, which is roughly 140 trillion in 2024, is still tiny. Right? And from this 5 trillion, 40 to 50% is from the corporate green bonds right now. And from corporate green bonds, mainly coming from European market. US was active till 2018, but now it's mainly from the European market and China. India is not that active in the corporate green bonds, but this scenario can change with time. In sovereign green bonds, India obviously have issued like 3 or 4 sovereign green bonds, but still compared to the South American countries, the numbers are small. But we should be hopeful that maybe in the future they issued more sovereign green bonds or the corporate green bonds.
Regarding the corporate green bond market, so which firms do you think drives this? Like, is it the financial firms or the non-financial firms which drives the corporate green?
Okay, so if you look the Bloomberg data, there are roughly 40 to 50% financial firms who issue green bonds in the corporate green bond market, and the rest are polluting sector firms. Like 45% are from the polluting sector, which is materials, industry, utility, and energy, and then roughly 10% from the others. So my paper showed that these are mainly helping the financial firms. So if you look at the overall global corporate green bond market, it is mainly helping the financial firms as compared to the polluting sector. But if you see from the social planners perspective or regulators perspective, it should help the polluting sector firms more, because from these firms we need transition, right? If society wants to reduce the emissions or any kind of negative externality, environmental externalities, we should expect from the polluting sector firms to do transitions, right? But this market is not giving a rebate to the polluting sector firms enough. On the other side, the financial sector firms, they do not have any kind of negative externalities, right? So they don't have emissions per se, at least not high enough as compared to polluting sector firms. But what they do is they issue the green bonds, use these proceeds and issue the green loans or sustainability loans or sustainability linked loans in the downstream. So they get the premium in the bond market. So their green bonds have a lower yield as compared to conventional bonds. But when they issue the green loans and the conventional loans issued by them to the same borrower is at the same interest rate. So what they are doing is they're keeping the premium earning at the green bond market to themselves and not passing in the loan market. So that's why the investors are smart from that perspective, and they understand that what they are doing, what banks or the financial firms are doing from that perspective. And that's why the greenium is mainly earned by the financial firms as compared to the non-financial firms or polluting sector firms.
Sir, is this issuance of corporate green bonds is acting like a financial signaling, or is it a reputational mechanism?
So I would say it's a both. Because if you see the green bond market, as I was saying earlier, that in the green bond market you have to restrict the use of proceeds. Now the question is, who can restrict the use of proceeds? These are large firms, profitable firms, who can take this risk or have the capability or ability to restrict their use of proceeds. Small firms will not do this, right? So that's why you see compared to the green bonds, sustainability linked bond market, where there are more homogeneous distribution from the different industries as compared to the green bond market. So for green bond market, these are kind of call it signaling also, because these are large firms and so they have reputations also. So I think it's a both kind of hypothesis you can put there. But if you go to the small firms, they are mainly going towards the sustainability linked bonds, because in the sustainability linked bond they say okay, we are not ready to restrict the use of proceeds, but what we can do is we can reduce our emissions, and if we are not able to do it, you can punish us. So that's the difference from the green bonds, sustainability linked bonds. And I also answered to your question about the hypothesis like signaling.
Thank you so much, sir. It was a great pleasure with having a great discussion with you. Thank you, audience. I think that you also find it an enlightenment one, as we did. Thank you so much, sir.
Thank you. Thank you, Nina.